One of the first things that you will see when you get a credit report is the credit score of the individual, yours or the customer whose loan you are currently processing. The score, we have a separate module which goes into details. So suffice to say that it's a decisioning tool along with the credit report. In India, it ranges from a low of 300 to a high of 900, and it reflects the likelihood that you will not pay back the loan. More on that in our subsequent modules. The second segment is, like I said, your demographic details or your personal details. Now, the personal details will of course have your name, your date of birth, your gender, and other identification numbers such as a PAN, a passport number, a voter's ID, etc. This information is represented differently by each bureau. The sample that you see on the screen is just an indicative sample. Now, you will wonder, why are there so many blanks or dashes there? The reason is, and this is a larger discussion that we will have as we go forward, is that a bureau can only represent on a report what has been supplied to it by the lender. So if you have not given a passport number or a voter's ID as in the example that you see, it won't appear. It is important that you give as much information as you can, because the deduping exercise, the deduplication exercise, the way of identifying you as the individual unique to a particular loan application is significantly dependent on the more information that you provide on the person's personal details. So, as a lender, you should be sure that you are capturing both in the application form and then from the application form into your system, and then from your system to the extraction of data to go to the bureau, all possible data, all correct data, data which is complete, accurate, current and comprehensive. As a borrower, you also have a responsibility. For example, if you don't give all information in your application form, which is the root source of all data, or if you give incorrect data, then that incorrect data will get captured into the system of the lender and therefore sent to the bureau, and will therefore reflect the accuracy of finding your details as against somebody else's whose PAN card might be the mistaken PAN card, for example, that you have keyed in. So, important both from you as a borrower's perspective and from a lender's perspective. The next segment of the demographic or personal information details is your contact information. Now, the contact information has several reasons for their importance. One, it is also used to identify you uniquely. Second is that some communication, if it has to go physically to you, will be taken by the bureau from the contact details here. Most bureaus will have at least 3 or 4 different addresses lines available in case you have given different addresses whilst you were applying for loans at different points of time. So for example, if I was living in a particular house when I applied for my credit card, and then I had moved to a new house when I took a housing loan, or I took a credit card and gave my office address, all these addresses will be reported by your different lenders, and they will all appear in this segment called the contact information. If you put in a 5th address, then the new address, the 5th address will show up. However, the oldest address that is there will drop off from the report. It will still be stored at the bureau, but it will not show up. You will only see the most recently reported 4 addresses. Again, as a borrower, you should make sure that you supply accurate data, and as a lender, you should make sure that when a person applies for a loan, is the address that he is giving reflecting in the bureau, or is there a completely new different address, and you need to then verify why that address does not tally with what the bureau is showing. One other piece of information that you do get in this contact information is when was this address reported, the date reported that you see. That also gives you a date to how many years the person has stayed in a particular house, has he moved houses often, and then you might want to ask him whether it's a rented place, a owned place, all of that, which, as you know, go into your credit decisioning process. The third segment in the demographic details is employment information. Now again, employment information, you have to be careful, because not only will you get details about where this person is working, etc., but you could also get annual income details. Now, the reason I say you could get is because not all lenders report that, and therefore not necessarily all bureaus show it in the report. But there are bureaus who have this information, who have used this income number to forecast the likelihood of the person defaulting if he takes more loans, because he's reached the edge as far as all his borrowings are concerned as a ratio of his income. So for example, if the income was say 1,000 rupees and the EMIs in the subsequent section of this report show 500 rupees, he's already stretched by 50%, in which case the next loan could be a trigger for a delinquency. So that's another piece of data, a piece of information that you as a lender must make sure you are looking at. However, there is a word of caution here, and I'll give you a personal example. When I pulled my report, I saw that the income and the employment details were from 7 years ago. I had changed, but I had never applied for a fresh loan. So that was the most recent data. Now that could be dangerous to take a decision, and therefore when you are doing the appraisal, you should verify that the person actually works where it is shown in the report and what his current income is. The second segment of the consumer report is perhaps the most important segment from a lender's perspective and equally from a borrower's perspective. It is the account information segment. Now this section contains all details of all your credit facilities, including the name of the lenders, the type of loan you've taken. Is it a home loan, an auto loan, a personal loan? Is it a credit card? Is it an education loan, etc.? It has your account numbers. When I say ownership details here, I mean, are you a borrower? Are you a joint borrower? Are you a guarantor? All that also shows up here. When did you take the loan, or when did you take the credit? When did you make the last payment? What was the loan amount? What is the current outstanding balance? And importantly, up to 3 years, what is your month-on-month repayment record of your payments? So the sample that you see on the screen reflects all that. If you've taken a credit card, the nomenclature is the same but appropriately modified. So you'll see the credit limit, you will see the high credit, and you will see what cash limits you have, and of course if you've been overdue again on repaying your credit card bills. Borrowers give you loans based on some security, especially for housing loans or car loans. Of course, there are personal loans also which are unsecured. If you have taken a secured loan where you have pledged your shares or your gold or your car or your mortgaged your property, then in this report you will also see the details of that security or collateral that you have provided. What was the value of the collateral at the time of providing the loan? What was that collateral? And of course then you will have another segment which talks about suit filed accounts, willful defaulters. When I say suit filed, I am talking about a lender filing a suit in the court of law to recover the money from you because you are now a significantly seasoned defaulter. Some lending institutions negotiate and settle the loan amount with the individual when you know that he cannot pay. Maybe take 50% and settle and write off the remaining balance. Those details will also show up here. And now what you will also get in this segment is if you availed a moratorium because of the 2020 RBI diktat on moratoriums, and the restructuring that happened will all reflect whether you actually did it or didn't do it in this particular segment. The next part of the accounts information segment itself is the actual payment history. As you can see, it goes month and year from left to right. So the most recent payment history is the first number on your screen, and then you go all the way to the right in the first row and then drop down to the second row. Now you will see different kinds of indicators as far as your payment history is concerned. A 000 will mean that you are not delinquent at all and you have paid your dues on time. If there is a number here, say 45 or 30, as you can see in the second row towards the end, that means for that particular month you have been delinquent by 30 days. If you still don't pay, then the next month this number will go up to 60 days and 90 days until you actually pay. Why is it important for you as a lender to see this? Is because the number of days of default is important in terms of the materiality of the default. If I have been late by 1, 2, 5 days, the way you would interpret that in your credit policy will be lighter and softer, if I can use the word, compared to somebody who has been delinquent for many days, many times and often enough. Some banks don't report days past due. When you say days past due, just to clarify, it means the number of days after which the due date has over and you have not paid on time. Now, you will also see words like standard, substandard, special mention account. Now, these are RBI's classifications and they are based upon certain number of days. So, for example, standard will mean anything from 0 to 90 or 89. 90 and above becomes substandard. Then it goes into special mention account and so on and so forth. This is important for you as a lender to understand the severity of the delinquency or the default. Because it's not just about a default, it's also about the period over which this person has not paid. You will see sometimes a figure like 900. Now that is a very strong signal for you, because that means the person is over due date for 900 days. And that is a big problem for you to give a loan now. Now, all this will also reflect in your credit policy, which your credit policy team and your underwriting team will have written. So, if you are writing that policy, you need to factor in the severity, the frequency of the delinquency. If you are implementing a policy which somebody else in your organization has written, you need to make sure that you read the detailed guidelines and the detailed policy and apply it at the front office when you are actually processing a loan application. The other thing here to remember is also, when did the delinquency or the default take place? If it took place 2 years ago and if it took place today, I'm sure you will agree that the severity is more because the person is delinquent today. Of course, assuming that the number of days is not changed. So a delinquency 24 months ago is severe depending upon the number of days the person has not paid, but less severe compared to somebody who's been delinquent more recently. The third and last segment of a consumer report or an individual's report is what is called the inquiry segment. The inquiry segment shows all the inquiries that any lending institution has made on you as an individual over the last several years. It has the date, it has the purpose, and it has the amount for which the inquiry was made. Now, one question that comes to mind is, as a lender, why is that important to me? I think it's important from 2 or 3 perspectives. The first, it tells you whether the individual whose loan you are looking at or whose application you are looking at has been shopping around and how frequently. Has he been rejected and therefore is moving on to applying somewhere else? The second reason it is important is, and you will see when we do the scoring module, that a component of the algorithm that decides the score reflects also the number of inquiries that have been made on you. As an individual who is borrowing, you should know whether these inquiries that have been made on you are actually a reason or a consequence of you having applied for a loan, or is some lending institution fishing to find out whether you have good for credit or you are bad for credit. Now, when you pull your own report, it's called a soft inquiry and therefore will not show up in your report. So don't worry when you pull a report that will it affect your score, or will it show up badly when somebody looks at your inquiries and see multiple inquiries. So the inquiry section again is important. You need to know whether the inquiries made on you are based on an application that you have made. As a lender, you need to know why is it that the person has applied to so many places and therefore resulted in so many inquiries being made. Again, like everything else, the recency of the inquiries becomes important. If there are 5 or 6 or many number of inquiries made in the last 12 months, say for example, then you need to go a little deeper and try and understand why this is there. There might be a genuine reason, but this helps you to decide whether you need to dig deeper into this aspect or you don't need to worry about this at all.